thought Split Capital had a fantastic take on this earlier, which is like, this is really like a byproduct of like Gary Gensler's regime that he tried to implement of like, saying come in and register with us. And they essentially pushed all the legitimate projects offshore. So it's like, this really was a byproduct of essentially the industry being like choked out.
Hey guys, DAS, the Digital Asset Summit, is coming back this year. It'll be in New York City next month. There'll be a ton of great speakers and guests there. Some of our friends on the research team, I know Mark Arjun, Ryan Cashflows Connor, they'll be there in the flesh. So you can have a chance to meet and chat with them and some key folks from around the industry and hear what they're thinking about crypto. For all our listeners out there, use code 0x10 at the link in the description. You can get 10% off tickets, and we really hope to see you there.
Nothing said on 0x Research is a recommendation to buy or sell securities or tokens. This podcast is for informational purposes only, and any views expressed by anyone on the show are solely our opinions, not financial advice. Boccaccio, Ryan, and our guests may hold positions in the companies, funds, or projects discussed. What's up, guys? Welcome back to another episode of 0x Research. Today I'm joined by Danny, and Ian from Kairos Research. Ian, do you want to give a gentle introduction of yourself and Kairos before we get started?
Yeah, sure. I'll give a gentle introduction. So Kairos is like an independent research firm, mainly focused on liquid staking, restaking, kind of the spillover effects into the rest of DeFi. It's just me and a co-founder, both used to work at Binance on the US arm. Did listings there, worked on the staking product as well. But yeah, we're all things crypto native. Thanks for having me on today.
Thank you for coming on, man. I guess like before we get started into, I think we'll likely do like a roundtable style episode. But before we get started into that, I want to ask a bit about restaking and why you guys decided to get into that way back. Because now we know. I guess a better question is, how has it been because originally you were very much positioned as restaking, and then since then you've shifted into staking and liquid staking and all things. And as a side note, like obviously you know a lot about everything, but I just always wanted to know like how you guys came about restaking and then how that you kind of shifted away a bit.
Yeah, I wouldn't say we shifted away. I think it was just like we started our research there and then we started writing about other things as well to kind of like show there's actually more like, breadth and depth to like the knowledge base. But the reason that we started with restaking is just because we saw it as one of like the few kind of like breakthrough DeFi primitives that's going to be around for like the next decade. It's going to take a while to actually kind of get going, but I think as inflation continues to like trend towards zero for a lot of these networks, like restaking is going to matter a lot more. And we're already seeing that, both on like Solana and Ethereum, like the TVL is quite sticky. And the important part of like where it's actually being used, is across like these, liquid assets. And that's like a huge chunk of DeFi over on Ethereum now. Like, largest supplied asset on Aave that's not ETH itself is, EtherFi is WE. And we just think it kind of makes like the best collateral. And you're seeing the same thing happen over on Solana now. But as far as like, seeing these AVS kind of get going, I think that's like it's a longer term game, and it's obviously quite painful for people. A lot of people are like really fatigued of the whole idea. But we think it's going to be pretty important for at least the next decade to come. So definitely have our focus on that.
That makes sense. On that staking note and about how yields are getting compressed, so Celestia is also thinking about reducing inflation as well, and Hyperliquid has like 2% APY. So I agree with you on that. Is that at some point you're gonna need extra yield on top to make it worth it? When do you? I guess Daniel Smith, this might be better for you. I don't know, Danny, if you guys already covered SIMD. Dan Smith, how do you see that shaping out, and do you think it is sustainable to reduce that? It's at 4.7%, right? Like that's the first reduction or something.
Yeah, so it's roughly in the neighborhood. Let's call it 5% for the sake of this conversation. Inflation today, and the proposal is to put like a market-driven controller on that number. The way it's structured is pretty aggressive, actually. Blockworks Research put out a nice piece on this, and there's a accompanying tweet thread you should check out. Maybe we can link that in the show notes. But the way it's set up, it's pretty aggressive. So it can drop to 0 in like a matter of weeks if nobody unstakes. So the parameter they're using is the stake rate, with 50% being the lever. I know this is going to a governance vote, I actually think next week, and I don't know how much it's shifted since it's been originally proposed, to be fair. So for additional context, I am referring to like the initial proposal, and some of these things may have been tweaked, but the initial proposal mentioned a stake rate of 50%, and then for every percentage point above that 50%, it would increase the rate at which the current inflation rate decreases. So for example, if you're at like 100% staked, you would decrease the total inflation very quickly. If you were at 51%, it would still be decreasing, but at a much slower rate. And at the current stake rates, roughly, let's call it 65, 70%. And in this world, if nobody unstakes, then inflation will go to 0 in like 2 to 3 weeks, basically. It's based on Solana epochs. Solana epochs are roughly 2 days and some change. And yeah, that's kind of like the gist of it. I definitely think it's directionally correct. I am just a little bit worried that I don't think anyone's going to unstake if inflation goes to 0. I really don't think people are super tolerant to that. Or if they do, it'll be like a very slow reactionary point in time, right? Like this is kind of my point about staking yields more broadly. If you like zoom out to this ETF conversation as well, staking is coming there. And like, I just don't think there's a ton of capital sitting on the sidelines being like, all right, I'm going to buy this 70 vol asset if I get 3% yield on it, right? It's like, that's just not the needle driver. So if your Solana staking rate goes from, let's call it 7% to 2.5%, 3%, I just don't think it's going to like, I don't think that's going to be the trigger for people to be like, I'm unstaking, I'm selling, I'm out of here. I just don't think that piece of the puzzle is as important as it's being kind of made out to be. And then the other piece is liquid staking. So let's say I am staked, and let's say my yield moves from 7 to 2%. Okay, and now I'm like pissed. I'm like, all right, I got to get more yield because that's what's important to me. Like, what am I going to do? Am I going to move into stables and go farm those, or am I just going to take my SOL, move it into Jito SOL or some other LST, and then go farm with that, right? And if I do that, I actually didn't unstake. My net change is my revealed preference is actually just yield, and I can do that through a liquid staking token. So for those reasons, I do think it'll go to 0. I think it'll go to 0 rather quickly. And I'm just not convinced that that's like super bad. I think the one thing that I don't have a good enough understanding of how this may or may not negatively impact is the whole voting piece of the puzzle here. So validators vote on the fork, and they are rewarded for doing so. And it costs money to do so as well, right? There are, it costs about 360 SOL per year for a validator to participate in the voting of the network. And I'm just, I don't even know if I'm worried here. Just one thing I have more questions about is like, all right, if inflation goes to 0, then there's less reward for voting on blocks, and like, will that have any impact at all? I guess that's really the broader point here. And I also feel like the distribution of rewards is stake weighted. I think that's a good thing. But one of the drawbacks here is if you're a new validator who just joined the set, it's pretty hard to hit that break even point, and reducing inflation will make it harder for that group. So we need to think about how commission rates need to change in response to a change in inflation is kind of the other thing here. And so that's really important for things like Jito stake distribution, any other LST stake distribution in the Solana Foundation stake program, right? Like right now, I think the max you can have is like somewhere between 8 and 10% commission. I think that needs to move higher in a world where there's no inflation.
I think that makes sense. Forgive me for asking this. How the hell does REV play into this? That's what's going to be returned eventually, right?
REV, a very hot topic today, a fundamental truth that people love to argue about. So this is exactly why REV is important. Yeah, right. If inflation is this great bootstrapping mechanism, what's the long-term solution? Well, it's taking user-generated activity, creating value from that, capturing value from that, not extracting, as this industry is so obsessed with hating on, right? You're just selling a viable product. People want to pay for it. You take some margin. So you have this REV number. It's your huge top line number. And some portion of that will flow back to the token. Some portion of that will flow back to validators who operate the network. And some portion of that will flow back to infrastructure providers who provide services in and of their own, right? It could be Judo Labs, could be LST providers, things of that nature. So REV is the sustainable portion of this, right? Again, just rounding here, let's say inflation yield is like 5% and total staking yield is 8%. If inflation goes to 0, you're left with that 3%. What is it consisted of? REV. So that is why REV is an important metric. As a token holder, it is the cash flows you receive.
I want to talk about that thing, and I want everybody to talk about it as well. This take is a bit insane. I'm sure you guys have seen this, but this is 0xNGMI tweeted it out and said around 3.6 to 6.6 billion has been extracted from memes on Solana. This assumes that trading bots and apps extracted 1 bill, Pump Fund extracted 500 mil, MEV extraction at 2 bill, AMMs at 2 bill. So I'm gonna say two things about. I'm gonna leave this up, but I'm gonna say two things here. First of all, I don't think you can say MEV is extraction if it's priority fees and fees, because that's just people paying to use the product. I will say, and Dan Smith and Danny, please don't be upset with me, but I will say 500 mil for Pump Fund. That's not extraction. People are paying to use that. But that is money that we've seen go out of the ecosystem to Kraken specifically. And a second number that I wanted to pull up was this one. And I think I'm going to tie this all together into a fantastic, are we seeing a vibe shift on Solana thing? And this is by this guy named Wasi Lawyer, who apparently ran the numbers and said that realized P&L for the Libra token was negative 286 mil. Which would explain why people are very, very upset. So, in general, I just want to talk a bit about this. I don't want to give a rundown of the Libra stuff. I think most people who are listening to the pod have a general understanding. A, what are the odds that we see a vibe shift on Solana? B, what are the chances that that actually negatively impacts it fundamentally? And I guess I kind of want to bear case for Solana and a bull case for Solana. Like, what do we think? Do we think it doesn't matter at all? We've thought about this with Danny like 3 times already. So, Danny, you can start if you want, and then we can move around the table to Ian second, and then Dan Smith final with the data.
Yeah. I just want to make one comment on the 0x not NGMI take. I find it funny that that the top line tweet is like how much extracted from meme coins on Solana, and then the response about OpenSea is how much OpenSea made, and not like the wording there is a bit strange to be deliberate about using extraction and then not using it for the NFT trading platforms. Not that I don't know if he was doing that intentionally or if just like that's where this industry is today. Like we're just so upset about memes that we have to use the word extracted today. But I find this point just hilarious that we're like trying to be virtue signaling about which apps are extracting and which apps are making money. I think that's just stupid. Like they're all just taking revenues from, by offering users a service that are paying the fee to use the service. Let's stop calling it extracting. It's a bit stupid from that lens. But I like the topic bull and bear case. Like I think it's clear. There's a clear picture for a bear case here that, users can become upset here in the short term. And, if that means we see a drop off in activity, it's natural that you could see people kind of shift away from wanting to trade the hot new thing if they think that they're going to get dumped on by an insider. It's become a bit more common past 2 weeks, right, since the Trump launch. So more of the new tokens and new things that are launching are just, it seems to be at least that a majority of these like new hot things have been, more, not quite as maybe like PVE, if you want to call it that, as they have been in the past. And so it wouldn't be surprising to see the market kind of, change behaviors, or like people who are, trading things on chain change their behavior a little bit and like maybe take a little break or look for things that are not following that model again, and back off and do other things. So I think there's a clear like immediate term bear case of, we could see meme trading activity cool quite significantly. Like if we look last year, there was a bit of a blow off with like animal coins, whiffs and pepes and You saw Solana trading activity kind of peak in early 24, and then even you saw this in the pump fund metrics as well, but fall by more than 50% going into the summer. So it wouldn't be crazy to see that again. I think we could certainly see a cooling off period, and then whether it continues on from there, that's probably like a longer discussion that we could have. But I'll leave that take there, and we can go from there.
Ian, do you have anything you want to add, or should I give a response and then you can continue talking?
No, I think Danny hit on some good points there. I definitely agree with the whole like extraction thing, as I alluded to in that first response. But it's just like these are businesses making money off of what users want to do. That is exclusive or excluding something like front running and sandwiching. That is extraction, very much so. Insider knowledge of things, extraction. Scams, outright scams like this Libra token, extraction. There's a very different piece of that than like, I don't know, Moonshot charging you 1% per trade. Yeah, that's a really shitty fucking fee model. And as me, I don't trade on it because it's a bad fee model, but that doesn't make it extraction, right? It's a free market. They're charging that because they think that they can make a viable business out of it. I think the opposite view of that would be they're charging that because they know this is super short-lived and their goal is to just make as much money as possible, as quickly as possible, because this won't be a viable long-term business. I feel like you can be rationally on either side of those fences, but I just struggle to call that extraction. Again, like the user is opting in to pay this 1% fee. That's just kind of the difference there for me. As far as like, is this bad for Solana? So meme coin trading roughly makes up ballpark like 70 to 80% of REV today. So if that were to just poof go away overnight, that is definitely not a great scenario to be in from this fundamental standpoint. And I think there's a pretty interesting story to be told around that piece. So if you like zoom out and think about this, let's call it this like meta of, or this sector of on-chain speculative gambling. I don't really have a great name for it, but let's just call it speculation for the sake of this conversation. It kind of like got born, let's say, a decade ago with Doge. It was a very simple game: buy, sell coin, one coin, and then it kind of evolved from there. Really hit a heyday with NFTs in 2021. There was, the songs of like the importance of how NFTs are shaping the world, let alone the industry and whatnot. And there's many 10K PFPs got launched, different set of pictures, roughly this interesting new game of speculation. Fast forward to this cycle, that shifted to meme coins, where, the marginal cost of launching a new token is basically zero, and you can crank these things out ad nauseum. There's a million tokens a week, et cetera, et cetera. That's where we are today. That is all this same game that has taken like these evolutionary steps into what it is today. And I think it kind of like got almost like took a step further in the style of game, the hardness of the game, and the abilities for like insiders to win at this game as well, right? I think that like we put a huge exclamation point on that with the whole Libra thing. This was like very clearly insider driven from many different perspectives, from the people involved to how it got launched, et cetera, et cetera. And so when you think about like, okay, is this good or bad for Solana? Like, what does this mean for the chain? You have to say like, okay, we've seen this game iterate over the years, and this is probably just another one of those cycles. So what is the next game going to be? And is Solana in a position to capture the activity from this next game? That's what I'm thinking about. And so if we look back at to why NFTs left, or where NFTs were in 2021, largely Ethereum, a little bit on the L2s, but like, I don't know, it's probably like 90-10 on Ethereum. So why did they leave? Well, the tech and the culture kind of shifted away from that, and they went to the new game, kind of like picked up and left, and 99% of the activity on meme coins happens on Solana. So if it's like we point to those two things, the tech and the culture, does Solana still have that for the next iteration of this game? Probably yes, but again, like without knowing what that game's going to be, it's hard to say. It's probably something in the AI space. I think that'll heat back up again in the back half of this year, without a doubt, as like OpenAI launches its agent framework and all the other ones do as well.
Ian.
No, Bach, you had your hand raised. I think you had something to
I was
say.
gonna say the next could be Eigenlayer, but I didn't on purpose, so we can move on.
The next what? The next game?
Yeah, the next game could be Restaking. Lever it up. No, I've been thinking about that quite a bit. Ian, I want you to go first, and then I want to end it with my general things, and then because I've been thinking about that capital gain thing quite a bit these days.
Okay, just go ahead and run with it then.
Here, I got to take really quick then. I do think we are seeing some early app teams. I'm just going to jump in because you guys are playing around. We're seeing some early app teams that are maybe trying to capitalize on what a next game could be in terms of like, I think a lot of this industry still boils down to like just pure trend and narrative trading. Like people talk about alts, fundamentals, and like fundamentally, what I think a lot of people are talking about is like, well, I'm going to bid this AI coin because AI is like the trend, the narrative, or I'm going to bid this other thing because this category is like the next trend, and I want to be early to that. And we are seeing some teams like on some of the newer chains come out with, or at least they're developing platforms where it's like pure trend or like narrative trading. And I don't know if that's like a poly market style where you're like going long short a particular narrative, and then you maybe grab mind share from CT or wherever else, and you can kind of go long short and play on that. But I think there's definitely future evolutions that you might be able to get rid of the insider problem if you can kind of more accurately track trends and allow people to just trade trends more so.
Yeah, and I also
will
don't
say
think this
Mega ETH has an app called Noise that's meant to be on the speculative thing. That's meant to allow you to speculate on narratives the way that you described them, Danny. I don't think you can get rid of the insider problem. That's my big thing. Also, Dan, to your point, how you said this was like NFTs, yes, or like you gave a very nice evolution of gambling on cryptocurrencies, and I agree with the general point. I will say that I see this more as both part of that, but also like the way that I've been viewing this entire, at least the past few months, has been an overcorrection from what we had before, where you could have no utility for tokens just because of the way that the regulation was set up and because of, I don't know, whatever other dynamics. And now we've like overcorrected way too heavily. And I think I saw a bunch of people blame Toli and I can't remember, and a bunch of other people at Solana Foundation, which is so stupid because they clearly can't go out and say, "Hey guys, stop launching meme coins on Solana." Like it's permissionless finance. On the other hand, I also agree with you in that. Like I've been thinking about it. What happens if Solana, like the meme coin narrative dies? Okay, REV goes down, whatever. Like let's say it loses 50-60% of value. I was gonna pull this up. I will now. This is from Dan. You've actually been quite like, to the listeners. Daniel Smith had this thesis that we topped in with the Trump launch. I don't know if he's like fully global macro top, but he did say we've likely like he should probably reduce some exposure. And if you look at the REV, it has like pretty, in hindsight, it has pretty clearly topped with the Trump launch. Like, how do you beat that? A, B, even if Solana can't beat that and we do see like a steady decline, whatever, like it makes up 70-80%, that declines 50%. Does it matter? Like, what are you going to use instead? There's Hyperliquid. What else? I'm not going on fucking Avalanche. Like that's what I'm gonna. I'm not going on Avalanche. I'm not going on Sonic. I don't give a fuck. Like you can say it's good. I'm sure the tech is good. There's just Ethereum mainnet, Mega ETH when it launches, Monet when it launches. That's it. What else? Where else are you supposed to do DeFi stuff? And I think Solana probably still stays just because of that. Because you got everybody to download wallets. You now know how to bridge over, bridge back out. Like the distribution that they've done, no matter how much you hate Solana as the crime chain, like they have better distribution than Coinbase to an extent now. So it doesn't really matter.
Yeah, I definitely think you're onto something with the distribution part. Like that's extremely hard to replicate. I think like the Phantom Wallet screenshot meta kind of showed us how many like just people were downloading this stuff, and now we've got like Moonshot and Photon and all those things as well. I think that's extremely hard to like mimic for any other chain. Like obviously everyone's gonna want a Phantom integration now. Like every time you're launching a chain, you're gonna try to get like Phantom to add you on. So that gives Phantom some great negotiating leverage there. But yeah, I mean, people are still going to be using Solana. These meme coins are going to live on. It's not like people are just going to like roll over and stop trading these things. And if we like think of blockchains or layer ones as economies, every economy has like negative externalities. like pollution is like a byproduct of manufacturing. Like smoking is like a public health thing. People are still going to do these things. Like they're just going to live on. We just have to accept that like, these are negative externalities that are going to exist no matter what. Like the insider stuff and all that. It's like, yeah, that's if you're breaking the law, like you're probably going to be charged and go to jail. It's like not that like complex. Like it's all on chain. It's insane to be doing some of this stuff. So like that's not like our job to regulate. Like we're not regulators. So like someone can step in and do that. But like also, I thought Split Capital had a fantastic take on this earlier, which is like this is really like a byproduct of like Gary Gensler's regime that he tried to implement of like saying come in and register with us, and they essentially pushed all the legitimate projects offshore. And then I can tell you firsthand from like being on a listings team, it was a lot easier to list meme coins because like it's just so simple. There's not like all these like things that you have to go and look at with like all these mechanisms and how they might represent different bits of existing financial like regulations. So it's like this really was a byproduct of essentially the industry being like choked out, and now we're just kind of like naturally healing. Like obviously these things are kind of passing on. I do think it's gonna be hard to like mimic the Trump top, but obviously there's gonna be like a soft landing away from this. Like you've got all the distribution, and when you have distribution, people want to go ahead and like launch on your chain. So like even if like this is like 70-80% of like rev right now, like time sensitive transactions are not like a thing that are just gonna like go away. People are gonna be willing to pay priority fees on a bunch of different things. It doesn't matter if it's like Libra coin or whatever coin, jail stool coin. Like it doesn't matter. People are gonna be trading these things no matter what.
Amen, brother. No, I totally agree. So I want to tie those 2 points from Baco and Ian together because Baco, you were kind of talking about the idea that, all right, this goes away. Like, is Solana dead? Is basically the question you're trying to get at it in my interpretation. And I think that ties beautifully to Ann's point of, yeah, today it's all meme coins, but okay, if you zoom out and say what is happening across the industry that is not happening on Solana, the list is quite short, right? Restaking was like the big thing, and then Jito brought that on board, and there's interesting things happening in that space across the ecosystem. And yet, when you look at so Baco earlier, you pulled up the Solana REV chart. The last couple of days have been on a downtrend. Yeah. And go to the or here, I'll share screen.
No, let me do it, please. I want to be useful.
Okay. Then go to the L1 comparison view. All right, and then blow up, zoom in on this top left chart.
I don't know how to do that.
Top right corner of the chart. Nice. Okay, so you'll notice that Solana REV is in a downtrend of like, let's call it the last 7 days. And now toggle this to 100% chart. Like what do you see, right? The whole industry is in a downslide, and Solana's share of total REV is roughly still 60%. To me, that's fascinating. The outlier here is BNB, and BNB has kind of had this like meme renaissance. So I think it's pretty interesting. You can see in that. I just want to bring that up while we're on this chart. But this is what the other piece here is like Solana's REV will probably take a serious 90+% drawdown from that Trump peak to the whatever the low is at the next point in time. And that doesn't mean the chain died. That doesn't mean the chain is dead. Why Solana has been so exciting to me over the last 2 years is because it proved that you can scale REV to a multi-billion-dollar state on the back of sub-cent transactions. That is fascinating. That was only a theory before Solana this cycle, right? They proved that it was possible. So whatever the next wave is of either a speculative game or a real DeFi application or some other thing, it is Solana is very well positioned for that to occur on that chain, right? And you can argue about, I didn't want meme coins in the first place. Like that was always a distraction, et cetera, et cetera. The chain got infinitely better over the last 2 years because of all of this bullshit that was happening on it. I'm not the biggest meme coin person in the world. I trade them every now and then because it's like kind of fun to gamble on them. But like, I don't know, I'm not a huge gambler either. But that doesn't mean I don't throw a random parlay with six player props on a Super Bowl game, right? Like, I don't know. It's fun. I'm going to do it every now and then. It's not like a burning passion of mine. I generally think it's quite stupid. So that said, it's like I'm looking for what's next, not that the fact that meme coins are going away. And again, I think Solana is in a great position to be the one that captures that. It's still one of the best fast, cheap chains. Now, the issue, or not the issue, but the concern, there's something to watch for, is there's a lot of those now. Sui and Aptos are, 1 or 2 years into about 2 years into their life cycle now. And that's kind of this like momentum shift. You can see that on every Solana chart, that 2 to 3 year mark. That's when things changed. And then we have Mega ETH and Monad on the horizon as well. But if you put a gun to my head and said, who's going to be the beneficiary of the let's call it like the negative cultural sentiment around Solana over the past week, I think it's Unichain, to be honest. Well, Hyperliquid's on the list. Hyperliquid's on the list, but I think it's Unichain. I think they can do really cool things with like V4 hooks that will be very interesting to this type of thing. So there's Austin Adams, who was involved with Uniswap for quite some time in like a research capacity, is building Whetstone, and they're also building Pure Markets. I think that's pretty interesting. The Flanchy thing's pretty interesting as well. But I tweeted this the other day, and Alex Watts from Fastlane responded like, "Oh, by the way, you're probably right, but." He actually disagreed. He didn't even say I'm right. But he said, oh, by the way, there's actually a huge risk here with V4 hooks ending up to be malicious. And I was like, I actually didn't think about that. That's pretty interesting. So I don't know. In a permissionless world, you're always going to have scams. And the big issue with meme coins, I think it got much easier to generate a scam. Again, earlier we talked about the marginal cost of launching a new coin is zero.
Yeah. Thank you for that, Daniel. I do think it's gotten much, much easier to do scams. I also think one of the main issues with meme coins is that some people genuinely think that they're like an evening force in crypto. Like they think it's good overall. I think meme coins are just, that thing that people used to say about MEV where it's like, oh, MEV is bad, MEV is good. And then I think like the best take for it is like it just exists. And it's the same with meme coins. Like there's no such thing as like a bad meme coin. Well, there are, but like there's no like evening out force for meme coins. It's not like anti-VC coins. It's just there. Like especially the current iterations. The way that they sell these supplies. I don't know if you guys watched that CoffeeZilla thing with Libra, and he was talking about, whoever it is was talking about how they did a pre-sale for Trump token. I'm gonna get swatted, by the way, but they did a pre-sale for the Trump token at the dinner at 500 mil valuation. And that's not like, maybe they didn't do that, but that's not something that doesn't happen. They do pre-sales and they sell a lot of supply through like sniping. So just to kind of be careful on that. Dan, I don't get Unichain. I don't get the value prop. It's just a separate L2. Does it source liquidity from elsewhere? I know they're supposed to do some intense stuff, but to me, it like, if you're just
hold on. Do you don't get the value prop for who? Who is Uniswap itself?
I want to buy a token.
Okay.
You are saying Uniswap could potentially be interesting to buy.
That's not what I said. I think their activity on the chain. I haven't done any like valuation analysis. I don't know if it makes sense. It's expensive. It's a multi-billion-dollar token.
I know we don't like TVL, so Lord forgive me for doing this, but I mean, brother, it has 9 mil TVL.
It launched a week ago. We've seen a lot of takes flying on the timeline of Unichain was a complete failure. I'm like, it's been fucking 7 days.
My question. I have a question here, Dan. Do you think that it can be successful because people will move their assets there, or because of what they're trying to do, like from an interop perspective of just like you'll make a trade on base and it'll route through Uni?
I think it's I think it's a strong brand. Everybody knows Uniswap with a mobile app. They have a wallet so they have distribution and strong brand. And I think they have good tech with V4 that can do unique things. Obviously, this is on many chains as well. But if I was them, I'd be obviously really pointing the cannon at my own chain. And because of those things, and again, with like meme coins being so hot and what Pure Markets is doing, it seems like an interesting landing spot. I'm not like super convicted in this. Again, I think it's Solana's, the ball is in Solana's court. Like someone has to come take it out of it at this point, from my view. As specifically on like the meme coin front, there's great DeFi apps across the ecosystem, across the industry. And so it's really just the fact that distribution, good brand, good tech, and they get to inherit all of everything Base did. They just literally get to pick that up, put it on their chain, right? They can just start ripping the exact same setup with their sequencer, crank the gas limit, and they're good to go.
What's up, guys? Welcome back to dYdX Research. Today, I'm joined by Antonio from dYdX. Thanks for coming on, Antonio.
Hey, thanks so much for having me.
One thing you mentioned is that, dYdX is an OG protocol in the space, 7 years. Where do you see DeFi standing right now? Because we've had a lot of changes recently.
So I think I saw a tweet earlier today that DeFi spot volume just eclipsed 20% of all crypto trading volume, which is a pretty exciting mark. So obviously it's something that has grown a lot in the past few years. That's been led by a lot of OG projects like dYdX, like a Uniswap, a few others there, but a lot of newer entrants as well, like Iridium on the spot side, obviously now Hyperliquid on the perp side as well. And it's great to see a lot of competition in the space. I think that's really excellent for users. But really, we still have a long way to go. And again, I really try to take a long-term approach to crypto generally, and especially dYdX. And if we zoom out and think about, hey, what's the goal here? It's not that 20%. It's really getting up to, wow, actually DeFi is the primary way that crypto is traded. And maybe not even crypto, maybe beyond that. And we're getting there. There's still a lot of things that we have to do from the user experience side, from really creating novel product experiences, because I think, again, that's really what it's all about. If you look at everything that has been really successful in Web3 generally so far, it's something that you fundamentally couldn't do on centralized technology. If you look at like a pump fund or an NFT or a Uniswap, they all have features where, hey, you just can't do these things. You can't just click a button and add a coin to a centralized exchange. You can't click once and become a market maker. And that's really unique to DeFi. So we need to double down on those things that have been working well, but at the same time, really push the envelope on what's possible with product experience in DeFi. And when will we actually get to that inflection point of 50% or more and DeFi is the primary way crypto is traded? I think it'll still be a little while, just because there's still a decent amount to go with the technology, especially with the product innovation, and the centralized players are pretty entrenched. But clearly this is the way things are going, and I'm really excited to be a part of it.
Perfect. And this actually relates to, so spot markets have been 20%, but derivatives dexes haven't really been able to compete with dexes. Do you see this changing?
Yeah, so I think all derivatives now are about 5% or so. So it's a decent amount less than spot, but that's pretty much how it's always been with the evolution of a spot exchange versus a derivatives exchange. And even why a dYdX was created after a lot of the very first OG spot decentralized exchanges. So a decentralized derivatives exchange is something that's pretty complicated, both from a technology perspective. And if you look at all of the biggest decentralized derivatives platforms right now, so like us, like Hyperliquid, a couple others there that are noteworthy, but all of us are really pushing what's possible on the technology side under the hood. So now we have the dYdX chain under the hood. Hyperliquid has their own chain with novel technology as well. And the reason for that is because these systems have to be incredibly performant. So right now on the dYdX chain, it does on the order of several thousand order places per second. So it's actually one of the most performant blockchains, period. And we don't even talk about that much, right? Because it's just designed to serve the product needs that this one product has. But it's something that is pretty complicated. So that's an aspect of it. I think the second aspect of it is on the product side, really derivatives products, even in DeFi, all kind of look the same so far. And that's really what I'm excited about, taking a stab at changing. So we've started to do that with things like instant market listings, with things like Megavault, could be different types of UIs, could be maybe a fundamentally different type of exchange eventually, if you have an exchange where there's thousands, tens of thousands, maybe even millions of things that are listed versus a centralized exchange that has hundreds. We're not there yet, but we will be eventually. And then I think the final thing that has slowed down the adoption of derivatives generally is it's just a pretty sophisticated type of market. So generally the adopters of these types of products really demands a high amount of sophistication in the product, and it just takes a little bit longer for those products to mature. But I really think they have started to in the past year or so, again, with us and Hyperliquid doing some pretty significant volume now, having really significant liquidity compared to centralized exchanges, and starting to have new offerings that you can't find on centralized exchanges. There are real reasons to use DEXs now.
Talking about good tech, I want to get the take on Kaito. And we have to talk about Kaito. I know some people might not want to talk about Kaito, but we have to talk about Kaito. So what do we... I'll actually do like a little intro. So I went on their GitHub yesterday. They have they have like a Kaito contract and a staked Kaito contract. And the staked Kaito contract has a transfer vesting rewards function, which could mean two things. A, it could mean like general epoch based staking rewards. B, it could be that we have to wait like a month to get our full rewards for Kaito token. They also have they used to have a VE Kaito. I think now it's called staked Kaito. I'm seeing ridiculous numbers on Twitter, and I know like you should never look into those and be like, yeah, this is gonna be it, but they could be giving people seafront properties. What do we... I guess I want...
What does that mean?
Here, I'll pull up some numbers. This will be great. Riley's gonna be really happy because I can't think of anybody else that ran it, so he's gonna get some views. But
He cooks with these token drop analyses,
dude,
to be honest.
Mr. Slop.
I love the screenshots.
Yeah. Good pictures, good color choices.
It does a lot for the brain.
It does. All right, so this is from Riley. Yap valuation. This is at 20%. FTVs at 500 mil. Yap value is $58. I don't think 500 mil FTV is unreasonable, by the way. For a launch for Kaito, I don't think it's unreasonable. I think they raised at 90 to 100 from Dragonfly. I don't think a 5x on that is crazy. 20% airdrop seems fair because they're based on what they moved to base. It was 33% of the token supply was moved to base. I assume they'll drop a portion to the NFTs. Let's say 8%, 10%, 20 to 25% might go to yappers.
Also, we got to think. Surely they do seasons, right? The numbers on this are so big that it's like, I don't know. If I was sitting in the seat, I'd probably rip seasons here. And so I was looking through their docs, and on the Kaito section of their docs, like the actual token section, there's 3 interesting bullet points where it's around driving market forces. So Kaito holders actively participate in shaping the network by influencing the distribution of attention within the AI-powered InfoFi ecosystem. AI-powered InfoFi ecosystem. That's some slop right there. Hold on. There's two more things. Then there's a network currency, which I thought that was kind of interesting because they call it a medium of exchange within the Kaito ecosystem. So that kind of gets the brain really like, all right, so who's paying what for what? Who's paying who for what? And then the last piece is governance. So one actually interesting piece in the governance section was that you basically get to vote on the changes to the algorithm, which is pretty interesting. So their point is this kind of allows the network to evolve with alignment to its community's interest, which I thought is interesting.
Is that the consumer product though, or for the Yaps product? Like, I don't think you should let any like the regular Joes who have a few Kaito tokens to influence the consumer product. And by consumer product, I mean the research product that they have, which is fantastic, by the way. Second to Blockworks Research. I don't know if that's good enough.
That's great. Thank you. Yeah, I don't know. I'm just really curious. Like, okay, so again, when you run the numbers on this, I think Riley's thing was like $60 a yap roughly. Like the top 500 people are getting significant paydays, and because of that, it's like, all right, how do you I don't know. I guess I'm hyper aware of the fact that there is going to be some token structure here. They're trying to do something with the token. It seems like a team that wants to experiment, and they're willing to do that. They have a very AI forward product. It's cutting edge in many other places. I think they're going to take that same logic to the token side. And I want to try to speculate on what they're going to do. I want to know if anyone's got any good ideas. Again, knowing it's a medium of exchange, who's paying who for what, and that there's some sort of like
I'm gonna
the
say,
driving market forces piece. Yeah, go.
I think they launched their own marketplace for the Yaps. For the Yap
What do you mean,
voting,
like the whole voting side of it? Okay, right. Yes,
the
agreed.
whole voting side of it.
Explain that though. People probably aren't aware of what that means.
Okay, well, basically, if you saw it on Twitter, there were people who were paying to be featured on a Kaito dashboard. You need to receive a certain amount of votes, and it's based on like the broadening vote schedule, the broad voting ecosystem, and it's like number 1, 2, and 3 get voted in to have dashboards. This has led to projects paying voters to vote for them, and I think the going price is like $1.50, $2 per vote. So projects would pay yappers for yaps. It feels ridiculous to say this, and they would vote for the dashboards to be put up. So I imagine Kaito wants to take this in-house, collect the 10% fee, 10% fee. I guess they could do some form of buyback, or they could give rewards to users, like to stakers. I don't know, dude. To be honest with you, I watched like 10 to 15 chats this morning because everybody looks at this and they say, what the fuck, $90 is too much, but it's not unrealistic. Like 25% to 600 mil is not unrealistic. I watch chats look at this and say, you know what, Kaito might actually be a great product. Let's think of what other products they could be launching underneath it. And at the end of the day, it's like, I don't know if they're like, I don't really get it. I get their consumer, the research product. I don't really get the graph and the AI side that they're trying to sell. Like the Yap side, it doesn't make a lot of sense to me.
Yeah, I was going to say, I saw some interesting takes from like the crypto marketing side of things from Emily Lai specifically, who mentioned just this idea around like if you were a project looking to get reach and influence on socials, like it's great that Kaito has this nice dashboard of people who get the most reach in particular niches. And you know exactly like who you might want to do a deal with or pay to promote your product to their audience. So from that angle, I see a very clear like product line from a marketing perspective for any project in this space that's looking to get reach. Whether or not that's like in the token or in Yap, like, I mean, who cares about that? But fundamentally, it's like, you know, they're going to be willing to pay a certain amount and Kaito can take a portion of that, and that's going to be revenues.
Yeah, I would totally agree with that. I mean, I think the market on attention is probably one of the most valuable in the world. You know, like everyone has limited time. You can't buy more time. What you give your time to matters a lot. You can attribute a lot of value to that. Like if you look at like some of the deals like influencers have, like outside of crypto and stuff, I mean, these are like, you know, huge, massive deals. So it's not like far-fetched to attribute some sort of monetary aspect to attention, especially at the beginning of the episode. We were talking about like what's the next like narrative or whatever for Solana, or like where does it go? If you can corner the market on attention and actually add a financial mechanism there to get people to talk about things, we know that or at least I believe that like price drives narrative, and narrative drives price. And so if you have like control over the second half of that, that's pretty powerful. And like good for them for experimenting with the token as well. Like there's not too many like actual companies that have tokens. So like that's actually just great to see in general.
Love that take. Love that take a lot. And I think actually the what you said about price versus narrative and who's driving what is super sentient right now, because meme coins are going down and now everybody hates them. And 3 months ago they were going up and everybody loved them. Yeah. Also, Arkham is probably the closest comparison, just given consumer product with a token, super low bar, but they're both kind of in that like edge of the space. Currently trading at a 700 million FDV, and like 2 months ago that was 3 times higher. So yeah, I agree with you, Boccaccio, that like, you know, the $600 million number seems sort of in the layup category. I don't want to start counting the chickens here, but I don't know. It's definitely like it's within play. It's within reach, and I think because of the AI heavy nature of Kaito, I think honestly it's a really exciting opportunity. And then last piece here is I'm gonna steal this tweet from Mike Ippolito here, but he mentioned that there's probably never a better moment actually to launch a token than during the death of this huge meme coin narrative. I think you can kind of capture all of the attention on you, and I think this is actually a huge win for Base getting this token to land on them. Kaito, is one of the hottest apps of the cycle, I think, in my mind, and having them build on top of you is a big win for any ecosystem.
Yeah, I agree with you. I think, and this also kind of answers my question from before: where the fuck do we go from here? Like, if there's nothing on Solana, Base is probably the clearest answer. Like, if there has to be another ecosystem that really, really blows up, it'll be Base. With regard to what else can be done with Kaito, I think payments is a dirty business, but Twitter to payments, they could actually pull off. Like, I feel like everybody's tried to pull that off, but they have everybody's link, Twitter to ETH address, so that's something that they could work with. They could just sell that data to the feds, which would make them a lot of money. And last up, I guess the attention thing. Ian, you know what? I'm going to disagree with you on the attention thing. I think that gets compressed very quickly. And it loses it. Like, I agree with you on the general premise. And I think it's very exciting if they try to build something on that. It's just kind of a very delicate situation because one great thing about crypto is that the financial aspects make everybody really try hard to do new stuff. And like, we're constantly always a bit on the frontier. One bad thing is that because of the financial aspects, everything gets compressed really bad. Like, meme coins could have been really, really cool. And 3 months ago when the price was going up, they were really, really cool. But then we turn it into financial genocide really, really quickly anytime we can, and it goes down south. So that's my only like gripe with it. I agree though, the dynamics could be cool, and it's just like on that end, the fact that they managed to build out crypto AI is.
I think that's totally fair pushback. I would counter that as well though, with saying that like people already get checks to tweet from Twitter itself. So like clearly like, there's monetary value in engaging content. And like, yeah, like there's definitely like a financial engineering aspect that Kaito has to get right in terms of like striking the right balance. Cause I can totally see a world where that gets compressed super quickly, in a world where like everyone just like, like sells their airdrop on day one because it's like just a ridiculous amount of money that they feel like they like zero cost of capital. You were literally tweeting and you got money, like to the tune of like maybe like millions of dollars, which is actually extraordinary. But I think you can build like the right product around that for sure, where to the point that you said on like you can have the opportunity to like tweak the algorithm to essentially like reward specific type of content, so like actual slop doesn't get rewarded. Like should like like AI XBT be getting like it's literally like a chat bot is about to get like millions of dollars of Kaito, which is objectively absurd. Does it
Or is it
deserve
really
that?
cool?
Could be the future.
It can be both. I mean,
Yeah, I think it is both.
But like if you try to explain that to anyone in outside of crypto, it's like it's just ridiculous. But it's happening. So I think like if it's like maybe it's like just a financial engineering aspect they have to get right about like because monetizing attention is a very tricky game that obviously people will want to game. So like maybe it's like a project wants to get like a leaderboard and they want to incentivize the best like educational content around their project. Like that's great. That I think that could work really well. It's definitely going to take some refining. But like there's also no like comp here. So it's there's no ceiling. There's also no floor.
I like your points there, Ian. I'll chime in as well, Buck. But I think like if you look to like Web 2 influencers and like beyond just the crypto sphere, like you could see this as like a platform as a replacement for like ad agencies, etc., where you know, they might have to like tweak how the actual dollars get divvied up. You know, so like you said, like, so that just absolute garbage just doesn't get rewarded stupidly. But either way, like, we, you know, there are games constantly in like the web 2 kind of content space, and those influencers, like, they compress that stuff really hard and just like really quickly jump on like the next trend, and they're constantly getting paid for it by like, you know, whoever's got fresh money for like the next hot ad. And I think you could look at this the same way, where like, there, you know, there's always new teams building, there's always new projects, they always want reach, they want people to look at their thing, try their app, or like buy their token, whatever. And there's always going to be people who are like yapping on Twitter. So this could be a lens to do that. Maybe in with like some kind of weird decentralized rails and
Yeah.
you know, payment platform to
Yeah.
to support that.
Yeah, I do agree. It'll be, I think, anytime you can kind of I don't like the word democratize, but I'm going to use it. You can democratize like speaking about a project, because like influencers get paid a lot for stuff that they don't necessarily even really do properly. And I think like there are a lot of people out there that are putting out good research, and if they can just get paid a little bit, I think that's fine. On the other hand, I also think this could be fantastic. Their algorithm is actually quite good. Like, you don't just you get rewarded for some slop. Like REV,
Dude, you
slop
copy
does
paste
right.
my exact tweets and get rewarded for it.
Yeah.
I'm using my tokens to, now that I know I can vote to tweak the algorithm, you're in trouble, buddy.
Yeah, gaming's always going to happen though, right? Like, as long as there's a system in place, it's going to get gamed. And like, again, if you look at the web 2 complement to this, it's like people just like run their YouTube videos on like random web pages and like rack up views, and then they sell that to ad agencies. Like, yeah, we got millions of views, and it's like all garbage, like crawler bots that aren't doing anything.
The thing I can't wrap my head around is how they're gonna like package this, because all right, they've created this leaderboard. Everybody's, the address they've implemented and their Twitter handle is linked in a database that they keep on base. Anybody can access that, given the nature of a blockchain. And so, like, all right, if you're going to do this thing where I think it was Ian, earlier you mentioned, like marketing CMOs love that we have this list of people that can communicate messages well. Like, why would I go through Kaito to use this when I could just go pull this database, and literally just look at it and then go contact that person because I know their Twitter handle. So that's the part that I haven't been able to like kind of like wrap my head around, is how do you like keep this within the bounds of the system you've created?
You can say this about all smart contracts. Like, why would I pay somebody using blockchain if I can just send it to their Venmo? It's like, I get what you mean, but it's like, why would you use the platform? You don't have to. It's like, I assume it'll have to be verifiable stuff. That's why I'm like, you want to be able to lock up, show some form of proof, and that's like gonna just happen on the platform versus like what's happening right now.
That's an upside for consumers as well that you can sell, right? Because now you can get, actual disclosures because their wallets are linked to this platform, and it's not just like, well, Ansom's probably shilling this ticker, but I have no way to know. Like, maybe he got paid or maybe he didn't. There's no way to know.
I like that.
Yeah, that's pretty interesting.
Are we done? Do we have anything else we want to do? Ian, is there anything that you wanted to cover and that I didn't cover? We kind of just shot off the hip today.
No, it's fun. I can give it like a shameless plug.
Yeah,
we're gonna do that. We're gonna do that. One sec.
Do you want to talk about your validator? I think that's kind of interesting.
Yeah, sure.
Ian, do you want to talk about your validator? I think that's kind of interesting.
Yeah, absolutely. So we recently launched a validator in partnership with Firstset on Solana. So like one of the newer validators to the network. Really excited to kind of be here for the next, I'd say, like generation of their like economics that are evolving, kind of what we talked about earlier. And then also there's going to be this pretty interesting SIMD around like duration-based staking yield. So like if you stake for longer, your yield is actually going to be different. So like now we're actually going to have like yield curves on chain, which is like pretty cool. And I think you can build a lot of interesting like DeFi products around those. So quite excited for that. And we'll also be announcing some validators on some other networks in the coming months. So definitely stay tuned on those. But thanks so much for the tee up there.
Well, I'm curious, why'd you pick Solana first?
Well, I think they're starting to have like some runaway tendencies in terms of, you know, when we think about like where we should be spending our time, just because like we're a really lean team, we're gonna look at like who has distribution, who has like the right tech, and like who has like the right like unit economics as well. Like Solana is like only going to get faster and cheaper, and so I think you kind of made a point about this earlier, Dan, about like how like we never really saw this play out until now, about like how fast cheap chains can actually make a lot more money than these you know, more distributed ones like Ethereum have like a lot more like solo stakers and validators on the network, but obviously there's some trade-offs there. So that's why we picked that, and we also think there's a really quickly evolving like DeFi community over there. Ultimately, blockchains are asset ledgers, and people want to use these things to trade, and there's no better example of what chain is being used to trade right now other than Solana. We've got some really interesting charts in this paper that we'll be putting out in the coming weeks. But one of the stunning things I think is the evolution of TVL across like categories from Ethereum versus Solana, heavily skewed on Solana towards trading. Like you're not counting LSTs, roughly 75% of the TVL on Solana is within DEXs or trading platforms, as opposed to roughly like 25 for Ethereum. And so that's a great thing for us to see, and we're pretty bullish on high performance networks for this exact same reason.
Yeah, you also see that same stat play out in the application revenue charts, right? If you look, Solana's leading there as well, and the driver of that is as many of these trading apps. You know, earlier we talked about how some of these have pretty high fees, so it's really no surprise. And when you're trading lottery tickets, I think most traders just don't really care about a 1% fee, for better or for worse.
Yeah, or if you're trading legitimate assets as well, time matters.
If you I'm curious how you think about other high performance networks, right? Like Sui and Aptos again are kind of at that 2-year mark where things start to get pretty interesting. I'm curious if you have any opinions there. And it's kind of same thing with these next gen chains that have either just launched or are launching.
Danny, were you about to say something?
Yeah, I was going to add to Dan's question here. Just curious, like the selection of Solana, was there like a second choice that you passed upon? And if that falls into the categories that he just mentioned, like, you know, run with it.
No, I wouldn't say there was a second choice, really. It just kind of, it made sense for a lot of different reasons, and also some existing research that we already have. But in terms of like other chains that we're looking at, actually pretty optimistic on Monad. I think a lot of people are pretty fatigued around the idea of these, people call them like VC coins, and that's totally fair, right? Like this is a project that's raised a lot of money in several rounds. But I think the overall reason people are bullish on Mega ETH will probably be similar to why people will be happy with like Monad. Because I think it's just like an interesting idea of like, what if you just took Ethereum and cranked it up and made it extremely fast? Obviously, it's going to be like really hard to attract liquidity when you are competing with like other EVM chains. I think that's going to be pretty hard. But I think there's some pretty interesting like thought leadership over there, specifically kind of coming from like the Mev sides, like Alex Watts from like Fastlane. He has some great takes, and he understands the EVM really well, but he also understands the SVM really well. And I think Solana is going to kind of need a sparring partner. And there's not too many people that really know the limitations of the SVM as well as he seems to. That I think will also matter quite a lot in the future when we expect chains just by default to be extremely cheap, extremely fast. But I mean, the hard part is like them building up like distribution and liquidity from day one. So we'll see what happens over there, but that's a network that we're pretty optimistic on. But yeah,
I completely agree on Monad. I think a lot of people are overcorrecting on the VC side very, very heavily. At the end of the day, like to build something from the ground up, the way that Monad had, like a lot of people shit on Monad because their testnet has taken quite a while. But these guys are like doing both hardware and software side changes to the EVM to like really, really crank it up. And I think there's like, I love Mega ETH. I don't know if I love Mega ETH. I think it's cool what they're doing, like both on the with their like community raises as well as like what they're building. I think it's very interesting. Mega Mafia is cool, but they are taking some pretty heavy trade-offs. Like one giant sequencer to make the whole thing work, and like some light nodes around it. Keone seemed, at least to me, relatively opinionated on decentralization. Maybe not like as opinionated on as Ethereum people, but he seemed pretty serious about it. And I think like trying to crank up the EVM by building it both like on the software side and the hardware side without taking like a bunch of decentralization trust assumptions, it's tough. So I'm excited for them. Liquidity, I don't know about liquidity, and like Barachain has all the liquidity in the world, and I mean, to be fair, it has only been 2 weeks, so we'll see. But I feel like liquidity kind of comes naturally if you have VCs, because they have to, like, they're incentivized to see it succeed, so
Mhm.
they'll work to bring in TVL. Apps is the big one, and I think it's going to be really, really hard. Like we saw with Barachain as well, even though it's EVM, it's tough to coordinate with 50, 60 teams to make them all launch day 1, day 2, day 3. It takes time, so we'll have to see if they're going to be able to launch day 1 or if we're going to have to wait. The worst fate is people bridge over and they're like, what the fuck is there to do? And they bridge out, and then you got to wait another 2 months for the narrative to come back to you.
Yeah, I think like liquidity is definitely an important part, but it's like also like a means to an end, not like an end itself. Like you need the liquidity to get other things going. You need the liquidity for like the apps and the apps to make revenue, and then like there's just kind of like spillover effects to the rest of the network economy. So I mean we'll see what happens with Barachain. I mean obviously to your point, like they have tons of liquidity. So we'll see, how that plays out, and that'll probably take several years. Same with like any of these chains that like actually matter. It's like narrative is of course short lived, but like we'll see. Maybe apps will help.
It actually is interesting that one point you mentioned, Boccaccio, of like bridging to an empty chain. It's miserable. I remember doing that with Aptos, I guess 2 years ago now. And I don't know, you trade 2 memes and then find the ohm rug, and then you have nothing left. Did the same thing with Abstract. I mean, you got to do it. It's a rite of passage to come over there, bridge 1 ETH, and know you're getting smoked.
I forgot about the App Dome rug.
The App Dome, baby.
She didn't bring it up for months now. It's the first time I've heard of it in maybe like 8 months. You haven't forgotten. That's crazy.
I know. That's a scar on my back I'll never forget. And yet here we are still doing it again. It's for the love of the game. So yeah, it's interesting to see like that is such a common known piece of the equation of like launching with nothing is a painful experience, and we still see it pretty often. So yeah, I agree that your point about like the Mega Mafia thing makes a ton of sense, and glad that they're actually trying to iterate and change that. It's almost a cold start problem, right? You have no ecosystem, you have to build something.
You know who kind of revolutionized that? Scott Lewis and Kanto. Day one, you have your own DEX, your own lending platform, like the basic fundamentals. And then Barachain kind of took it a bit further. They also launched the same things like Burps, Bex, Baraswap now, Baralend, whatever. And now we have every single chain realizing that nobody wants to bridge over to an empty chain, so they need to launch products on.
Yeah, the benefit you get with something like Monad, like people get mad about being VC backed and they raise so much money, but the benefit that they have is that they've been able to do like accelerators and Monad Madness and all these campaigns to basically like convince teams to come over by offering them, if it's tokens, if it's dollars, whatever. And being VC backed, having sort of maybe a cohort of VCs or advisors who can also support those teams, like that's a clear benefit that they can give to their community.
Boccaccio, if you can only hold 1 token from now until the middle of the year, July 1st.
Hyperliquid or Bitcoin?
I should have caveated that with except Hyperliquid.
Except Hyperliquid Bitcoin.
Okay.
I'm considering selling more of my soul, but I don't know if I will. Like, I feel like I'm taking a very drastic decision following a massively like kind of like a black swan event, so I haven't done it yet. I have sold a decent side of my position in Sol, but I'm considering removing it going forward as well. But
I think the big question is exactly what we're talking about, right? Like, are these? It seems now that it's like very much in order to play in the game today, you need like a fast, high throughput chain, and we're seeing like all the new launches. Like we just talked about Mega ETH and Monad, that's exactly what they're doing. And so like the question is like, if you're a Sol holder today, it's like, does attention, does liquidity, does stuff move over there? There's no way to know, right? They're not even live yet, but I think that's kind of the question everyone has in their mind.
one good thing about crypto is that nothing ever prices down. Things tend to just price up. Like when you do a comp, well, things go down a lot. But what I'm trying to say here is,
I was
like,
going to say, can we clip that section right there?
no. I'll explain what I mean, and then you can call me an idiot if I'm actually wrong. Think of, no one's ever like, Ethereum should like come down to 300 bill or whatever Solana's at. People are like, Solana should go up to like whatever 600 bill, and ETH should come down to there. Do you get what I'm trying to say? Like, no, people want to price things up. People don't want to price things down. So I think like whatever launches, it'll just have, like, Solana might lose some attention, but no one's gonna be like, Monad does the same thing at 30 bill. Why would I ever buy Solana? No, it'll be like Monad needs to go to 150. If that makes sense. Daniel,
Yeah, that makes sense. I think it's also like if like you FUD the thing that you're comping to, you're kind of limiting your upside when you're comping. So I think that's why that was happening a lot with like Sol ETH. I think like we saw that this cycle, like it got like pretty bad. I think people kind of took their foot off the gas a bit because they started to realize kind of what was going on there. It's like better to actually have two large assets.
yeah. It's also, they started launching L2s on Solana as well, so I think that also kind of made them relax a bit. Like, I think the Solana side also realizes that some apps need their own block space, and there's nothing wrong with that. Like, what is it? Zeta chain? Zeta has one?
Yeah, Zeta Markets.
Drift needs one as well. Like, if you're actually going to be a good perps product, you need to be in your own block space. No worries at all. You can just keep churning. That's literally the only thing that you need. And I know that Solana scales very, very well. We've seen that, but you kind of want your own space for that. So I think we'll see. Grass, they call themselves network extension, but it's the layer 2 rollup. Like,
for what it's worth, the Drift team would push back on that claim.
They can push back however much they want. I've used Drift. I've used other perp stacks as unnamed. I believe that the ones that are on their own chain are better than the ones on.
Right? Yeah,
Hyperliquid.
I get.
It could be. I mean, that could just be the limitations of today as well, right? I mean, who knows?
Yeah.
If Solana scaled 1000x, then like, would you still need one? Maybe.
But,
what's the perp dex building on Mega ETH?
There's a bunch. Valhalla is the one.
Right, and like they have the same intent, right? And maybe Mega ETH is better infrastructure for this. We don't know yet, but I don't know. It's too early to call it on that, in my opinion. But I'm not saying Hyperliquid's not a great product. It's the best perps product today. I'm just saying that one point is like, yeah, we're still battling with some broken tech.
Very good. The argument here is that what if Solana scales 1000x? But I assume if Solana scales 1000x, it's going to be more and more dog shit launching on Solana, meaning that it's realistically only scaled 2x. There's more volume on the chain. Like, people, I don't know. I know the argument is that you want to be close to the asset issues, but I think you can just have one single bridge, like a deposit contract, and it would still work. Like, there's no need to just, you can borrow on the collateral on the Solana side, on Camino, ship that into Drift, and it would still work.
The memes will continue until people stop playing the game, to just on the first piece, right? Like, it can be worthless to most people and people that are exhausted of it and people that never liked it in the first place, but they will stop being issued when people stop trading them. And if that doesn't happen, then they are useful to some cohort of people. So that's on the first piece. And the second piece, yeah, I don't totally disagree. I mean, I think it's just a good question of atomic composability, right? Do you need one transaction in between the thing you're trying to do and where you are today? there's actually pretty cool stuff in the Avalanche ecosystem that is abstracting that. You can execute a swap in one transaction from one chain to another now. That's nice to see.
What did I say at the start of the pod? Yeah.
That you don't like Avalanche.
He doesn't want to go to Avalanche.
No Avalanche talk, man.
Yeah, I mean, I'm just going to agree with Dan. Like, I think it's just we're looking at what the technical limitations are today, and we're saying that like this is how it's always going to be, and like maybe it will and maybe it won't. Like, we just don't know. If we get a massive technical improvement that enables people to do perp dexes at massive scale, just like all on one, single state machine, then there you have it. But if we don't, then we don't.
Also, two things have now happened in the time we started recording that I feel like are relevant to the conversation. One, the Argentinian prime minister, president, I'm not sure what his official title is, has retweeted a post about how to buy the coin. So this is taking stranger turns than we can imagine. I guess for full context, he originally endorsed it, then deleted the tweet, and then got sued for something around the neighborhood of fraud or manipulation. And then now he's again retweeted a post about how to buy the token. It's up 100% over like the last hour. And
one thing to add there is that he also said that he's going to arrest or like probe into whoever launched it before he retweeted it. So yesterday he spent time saying we're like launching an investigation into this entire ordeal.
So now he's back to endorsing it. I'm incredibly confused.
I think he's hacked, probably.
Yeah, that's probably the default position. And then secondly, in the terms of presidential coins here, this is just like one of those solid intel tweets. You got to always rip these ones with a grain of salt, but says Trump website shows airdrop claim page for users who bought Trump products before February 15th. I really don't know what that means, but what it sounds
if you bought one of
like.
those Trump watches, you're getting a fat airdrop.
No, it's free Trump per buy. What is one Trump? 20, 25?
Like $20?
Free Trump per what?
Per buy.
Well, they have a lot of products, so I don't know. Per buy wouldn't even make sense, I think.
It's like per email that you bought with.
So if you bought something on the Trump website, you're getting airdrop Trump tokens. Is that what it is?
Yeah, $60 you get to claim. It's pretty good, dude. Does he have anything lower than $60?
No, probably not.
I don't think so.
How much was that watch?
The watch was like hundreds, if not maybe 1,000.
We live in a fucked up timeline.
So you're getting like a little like after the fact coupon code basically for your purchase.
Actually, I read a tweet yesterday that has nothing to do with crypto, but I thought was pretty interesting context. Let me pull this up.
Guys, I think we're done.
No, I think this isn't. This is a good ending point. This is a good ending point.
We're done. Bro.
One more fun fact.
It was a tweet. I won't read the whole thing. It's pretty long, but it's talking about, America has never seemed crazier than now. And it goes into talking about this as like, imagine that you're an American parent in 1963. You're the veteran of World War II. Your wife has never worked, and you're just the plain old average American family. And then 5 or 6 years from then, basically your son goes to college. His hair grows out to the length of a girl. He's smoking weed, which is like only something that happened in the ghettos. And he's listening to crazy music, and he's got like a Viet Cong flag in his dorm room. And your daughter's now in college, and she's living in co-ed dorms, et cetera, et cetera. Like the world has totally changed. And you probably would be this fucking like crazy thing of like how fucked up the world has become. And that is, I don't know, it's kind of what it feels like to me right now. And I thought that was pretty interesting perspective of like, honestly, change is just this weird, painful experience, no matter where, when, how, why. There's like just people are fucked up, and fucked up things always happen.
It used to just be fun dog coins, and then presidents of the free world decided that they were going to burn us all down.
It's been a pleasure, Boccaccio. It was great seeing like your like little emotes. You were, I don't know if anyone who was watching saw that, but he'd do like thumbs up. He'd essentially just like react. He'd do the hand if you had a question. Very polite.
Always gotta watch the pods, not just listen to them. You gotta get the full experience.
And if you only watch Boccaccio's like square, because there's a lot happening there.
Thank you for coming on, Ian. I appreciate it. This was kind of a interesting pod. I think we haven't had this group we haven't had you ever, but I think you got kind of unlucky in that Daniel Smith hasn't spoken in weeks, so he wanted to speak a lot. but you also got kind of lucky because I think this is like the top podcast crew. It's me, Danny, and Dan Smith. So, but more importantly, I appreciate you coming on. And don't look like a guy who's really into restaking. Kind of crazy to me that you're really into restaking.
We can get into restaking physiognomy next pod.
Go check out Kairos Research. They got a fantastic Twitter. Ian's a good friend of mine. 10 out of 10 recommend.
Make sure
Thanks
to
for coming
stake
on,
with
Ian.
them on Solana. And
yes,
Ian, thanks for coming on.